Now, over to CME Group for easy-to-follow futures and options trades.
Welcome to Market Movers. I'm Jim Urio, and today we're discussing trade as tariffs and Nafta have been dominating headlines. We're going to be looking at using the Canadian dollar options to either create exposure or hedge risks as the trade mood has constantly evolved. Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
So, as of now, the market feels a little bit of optimism. Xi from China came out and said they're willing to negotiate. In Mexico, they said they were 80% sure that Nafta was going to end happily. I paraphrase. Is all of this behind us now?
No, it's not. Now, I agree with you that things are a little bit more optimistic than they were, say, yesterday, okay, which means that they're different than they were Monday, which to me, Jim, really speaks to the fact that this is a professionals market, it's a traders market, it's a market where you need to be nimble. You're right about those headlines. Those are good headlines, but we've seen this movie before. Those things can turn on a dime.
When you look at the currency market and you look at the dollar, do you think that the fluctuations we've seen, and we're going to be looking at Canada, are these more of a domestic story, or do they have to do with the pairs themselves?
I think it's the pairs themselves. Now, the fun part about the currency markets, I think, these days is you can really get some oomph out of these headline moves. So when you look at trading currencies, as we talk about today with the dollar, Canadian dollar, that is, you're going to see some pretty good outside move, I believe, when it comes to some of these reactions.
Okay, after we talk about trades, I'm going to ask you how oil figures into this, so start planning your response. Now, before we dive into our trade discussion, I'd like to point out that, as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to either manage risk or create additional trade opportunities, not as recommendations or advice. Prices and movements will vary in the markets. Underlying right now in the June Canada was 79.62, Scott.
Yeah, so look, I mean, if you look at the charts, I guess when I approached this, Jim, I thought about a couple things. I thought, okay, what do the headlines tell us? What have they been telling us? And what are they likely to tell us going forward? And to me, the dollar, especially versus some of the other currencies, including the Canadian dollar, it's been an overreaction in my opinion. Okay, so I wanted to look at things that way and also look at the charts too to see if we could find out maybe some levels that would be important. So specifically, Jim, today, I'm looking at buying the week 3, April 79.78 put spread. It'll cost about 15 ticks to put on. It'll risk $150 to make potential $850 if it fills out. Now, this is one of those trades, Jim, that you can put on where if it goes in your favor because of some of the headline risk that's out there that we've all seen, maybe take a little bit off, take some profits.
I like the pricing of this trade. You're only 62 ticks away from the top strike. The trade I'm about to give is 90-something away from the strike, and it's
but the opposite direction?
Cheaper. But it's the opposite direction.
Come on.
No, I like Canada because I believe that there's a global trade thing that's happened that people feel better. Oil, we're going to talk about that soon too. I'm looking at buying the week 3, April 80.50, 81.50 call spread for 12 ticks. This trade risks 120 to make a potential 880.
Yeah, so two ways to expose yourself there, both bullishly and bearishly, but still a nice risk-reward opportunity, in my opinion, given all these crazy headlines that are out there, where any given day we're seeing a lot of things change, so therefore I believe in currencies especially there's a lot of reaction going on.
Okay, now we're going to talk about oil. Canada dollar usually has a pretty good correlation to oil. Is this move higher in Canada strictly just to move off of oil?
No, I don't believe it is. I mean, that seems to be a little bit of the red herring going on right now, but I believe that if we see oil tail off here as expected to do, we could still see some movement in the dollar in Canada.
I believe it's a tariff thing, a Nafta thing, and an oil thing that's pushing
Not
Canada
that gold medal game from recent past.
Not the recent gold medal
good
game.
thing.
Thanks for joining us in this special edition of Market Movers. I'm Jim Urio, where we're hoping to make you a better trader.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.